Global stock markets continued their downward trend on Friday as companies within the S&P 500 lost a staggering $5 trillion in market value following US President Donald Trump's announcement of extensive tariffs on Wednesday. Concurrently, investors sought refuge in government bonds. This $5 trillion decline represents the largest two-day drop for the S&P 500 index, surpassing the previous record of a $3.3 trillion loss in March 2020, when the pandemic severely impacted global markets. One of the most significant weeks for the global economy in recent years concluded on Friday, with the Nasdaq entering a bear market as investors expressed concerns that the US President Donald Trump's trade war could lead to a worldwide recession. Less than 48 hours after Trump increased tariffs to their highest levels in over a century, China announced it would impose an additional 34% duty on all US imports, further intensifying the global trade conflict. Before I proceed, I encourage you to like the video and share your views on the topic in the comment section below. Your feedback is invaluable for us and a wider audience around the world. Any expectations that Federal Reserve Chair Jerome Powell would indicate a willingness to lower interest rates, as Trump seemed to suggest in a social media post earlier that day, were quickly dispelled. Powell emphasized the elevated risk to both economic growth and inflation. This cautious stance unsettled Wall Street even more, resulting in a 6% decline in the S&P 500, which led to a market capitalization loss of $5 trillion within just 2 days. The Federal Reserve finds itself in a challenging position, grappling with the increasing likelihood of recession alongside rising inflationary pressures. While treasuries appeared caught between these conflicting forces on Friday, it is evident where rate traders are directing their investments, with 4 interest rate cuts fully anticipated for this year, beginning in June. Given the severity of the equity market downturn, the significant decline in confidence, and the highly uncertain outlook, it would not be entirely surprising if the Federal Reserve decided to lower interest rates during its meeting on May 6 and 7. In fact, if the market decline persists into next week, an adjustment before the scheduled meeting is entirely possible. This represents the most significant drop in global stock markets since the pandemic in 2020. However, unlike the crisis of that time and the global financial crisis of 2008, the current upheaval of Wall Street stems from deliberate policy decisions made by the government that was likely aware of the potential for such an outcome. Many analysts believe this situation is unprecedented. Additionally, some of the economic and market statistics that have captured investors' attention this week have not been observed in quite some time. The highest US tariffs in over a century, which effectively represent the largest tax increase in the US since 1968, according to analysts at JP Morgan, who now suggest that a global recession is more probable than not. In just 2 days, $5 trillion in US equity market capitalization has been erased, bringing the total market cap lost since Trump's inauguration in January to nearly $8 trillion. Economists at Barclays now predict that US inflation will surpass 4% this year, while GDP is expected to decline in the fourth quarter, indicating a potential recession. The global economy is also likely to feel the impact. Analysts at Citi estimate that Eurozone growth could be reduced by as much as 1% point this year, bringing the region close to recession, while China may experience a similar decrease in GDP growth, which is already projected to fall below 5%, as global demand is anticipated to sharply decrease if not contract. Oil prices fell over 6% on Friday for the second consecutive day. Brent crude futures reached a 4-year low of nearly $62 per barrel and have decreased by 26% compared to the previous year. Markets will be closed over the weekend, but the lines of communication between policymakers around the world will very much be open as governments frantically try to de-escalate the global trade war and central bankers weigh up their policy response. Monday promises to be another rocky ride. The S&P 500, Nasdaq, Dow, and Russell 2000 all suffered their worst week since 2020. The same goes for Japan's Nikkei and European stocks. The Nasdaq has declined over 20% from its peak in December, officially entering bear market territory. And just now, Trump asked Americans to hang tough amid the market crash. Thank you for watching, and don't forget to subscribe to our channel for new videos on important international topics.